Welcome to the live show, everyone. Welcome. Join in the virtual room and get ready to ask your questions because you're on another live show, the first of 2024. Happy New Year to everyone tuning in. I'm your host, Olivia Higgins. Now, while we wait for a few more people to join us, here's a video crafted and created just for you. Especially to the people who just joined us. Happy New Year to everyone. Here's the first live show of January 2024. And once again, you're with me, your host, Olivia Higgins. Now, I'd like to remind everyone today it's about education, okay? So do not take anything as financial advice and to use everything just as a learning tool for yourselves as we continue to guide you for the new year and also in your own self-directed financial journey. So be ready to engage in the discussions, okay? I want to see some questions. I want to pick up the best questions for our experts today joining us for the show. So today's topic, we're going to discover the smarter way to invest in Japan. So if you want to know more about this and if you have any questions surrounding this topic, type in your questions, start it right now and keep us engaged because I'll be listening and watching your questions for the next 60 minutes, okay? Today with me from Lion Global Investors, we have Ong Ai-ling, who is the portfolio manager and head of artificial intelligence of investments, and Keisuke Umura, who is the senior portfolio manager of Nomura Asset Management. Welcome to the show, Ai-ling and Umura.
Thank you, Olivia. Hi, everyone.
Hi, so glad to have you. First time on the show. Now, tell us about yourself and also what we can expect from today, Ai-ling.
Yes, everyone. Yes, Olivia. I'm Ong Ai-ling. I spent almost 2 decades in the asset management industry, working across a variety of alternative asset managers, hedge funds, and long only funds. And in fact, one of the previous hedge funds that I was with was one of the pioneers that started using alternative data, such as credit card data and even drone data. Currently, I'm here at Lion Global Investors. I'm the head of artificial intelligence of investments here. And within the long only space in Singapore, my team is one of the pioneers to have successfully utilized artificial intelligence to make investment decisions. And before you ask, no, we don't just ask ChatGPT for what stocks to buy next. In fact, we use state-of-the-art AI models to analyze millions of data points on a wide variety of market instruments. And then we train those models to make predictions and recommendations in a way very similar to how a human analyst, like I used to be, would do. But more on that later.
Absolutely. I'm excited to find out as well what that entails. So thank you for that strong beginning and also answering a key fundamental question for the topic of today. But let's extend that later on. Now, tell us more about yourself, Umura, and also what you'll be sharing about for today.
Yes, so I'm Keisuke Uemura, Senior Portfolio Manager of Nomura Asset Management in Tokyo. And now it's been more than 15 years I have joined Nomura Asset Management. And now I'm engaged in the portfolio management of the global quantitative active equity strategy. So today, Eileen and I would like to introduce the collaborative products for LC and Nomura. So that investing in Japan using AI technology. So thanks for having me today.
Thank you as well. And thank you for tuning in from Japan. I'm really happy that both of you are on here. And of course, at the end of the day, for the second half, we're going to answer some of the burning questions on their minds. Okay, so let's dive straight into the topic of today. Now, I'm going to open the floor for both of you. Why Japan?
Maybe I'll answer first. I should praise Japan on behalf of Uemura-san. I'm just wondering, how many of you were out holidaying in Japan over the December school holidays? Because when I ask my friends, it feels like almost everyone, or almost half of Singapore, almost everyone was in Japan at some point last year, because the weak Japanese yen certainly helped with that. And we find that since the end of COVID, Japan has seen an unprecedented rebound in inbound tourism. But for us here in Lion Global and Nomura, our bull case on Japan goes way beyond just tradition or tourism or advanced technology. For us, slide 8, please. We feel that Japan is just too big to ignore. So I speak to sophisticated institutional investors all the time. Historically, they've allocated to China. As we know now with the geopolitics, it's becoming much harder for all global investors to allocate too much to China. In fact, most of them are reducing their exposure, reducing their risk to China. India is one that, is on the up and rise, but India, we've seen it many times, many cycles, and currently it does look quite expensive. We'd of course love to allocate to the US. The S&P's done very well, NASDAQ even better, but it's already taking up some 60, 70, 80% of people's allocations. And we all know that you must have some sort of diversification. Who knows what the Fed's going to do later this year, right? So I often get asked by investors, well, where else can I allocate? So when we were brainstorming this, we said, well, why not Japan? Because Japan is the world's fourth largest economy by GDP. It is actually the only Asia Pacific member in the G7. And actually, if you look at the MSCI World Index, they have the second largest allocation to Japan. So if nothing else, you need to think about having some sort of allocation to Japan. And for Singaporean investors listening to us today, our Lion Nomura Japan Active ETF is currently the only ETF in Singapore that is focused solely on Japan. So if I can move on to the other, well, we see three big catalysts why Japan is going to continue booming. So slide 9, Japan has actually woken up. We feel it's a sleeping giant, and it's just woken up from its 3-decade-long slumber. Right? The last economic boom in Japan was from the late 1980s to the early 1990s. And between 1990 to 2020, the Japanese stock market was actually one of the worst performing globally. It underperformed AXJ, it underperformed STI, MSCI World, and definitely underperformed the US. But that is in the past. Now, the sleeping giant has awoken. In 2021 and 2022, it kept pace with the global indices. And in 2023, it was the world's second best performing market. And why is the stock market doing so well? We've seen in my almost 2 decades of investing, I've seen lots of false starts, right? Trying to break out of the 1990s bubble. Why this time is it different? So the recent JPX event, I was asked by the panelists, why is it different for Japan this time? So I remember Abenomics very well. The Abenomics first announced in 2012. Slide 10, please. Back then, I was working in a hedge fund, and we were actually really excited about the promises that Abe-san made to investors. He talked about monetary easing, fiscal stimulus, structural and corporate governance reforms. So slide 11, please. So if you allow me to just spend 2 seconds to talk about my personal experience when I was working in a hedge fund back then. In 2015, I had on a very popular trade to buy, no names, a certain Japanese conglomerate. This conglomerate consisted of three main businesses: a department store, a bank, and a convenience store. Our thesis was very simple. They had this perennially loss-making department store business. And if they simply shut that down or sell it off and focus on the very profitable banking business and the convenience store business, your shareholder return on capital would improve, the conglomerate would trade at a much higher multiple, and everyone will be happy. So I tried to convince management. I flew up to Japan rather. I spoke to them, and I tried several times, and I was unfortunately quite unceremoniously told to stop pushing the point. I was told by management, he said, the chairman has personal reasons for keeping the department store alive, and it has nothing to do with profits. And he said to me, this will never happen, not in your lifetime. So I said, oh gosh. So, we got out of that trade. Actually, I am pleased to share today that in 2022 November, that same conglomerate that I was, bought into in 2015 back then, it announced that it would actually sell its department store division. So I'm still alive today, so it has happened during my lifetime. So I like to say, on a personal basis, I like to think that, yes, this time it is different. So we're finally seeing the reforms that Abe put in place, the Stewardship Code of 2014, the Governance Code of 2015. We're starting to see this finally kick off. And, our AI model says that it's different this time as well. So we noticed a few observations when we consult our AI model. Firstly, we have a global AI model, and that model actually started going overweight Japan around 2021. It was actually faster and earlier to the game than I was, right? And secondly, we noticed that, so our AI models tend to give us reasons for why they pick certain stocks. And we noticed that the reasons that they used for picking certain stocks changed quite a bit from 2020 to 2023. In 2020, it tended to focus on very technical reasons, things like fund flows, how many ETFs are buying into the stock, is it GPIF, which is the Japanese government pension fund, so government support for a stock. These were very technical reasons, still good reasons to buy stocks, but those were the reasons back then. In 2022 and 2023, a lot of our models' reasons for buying the stocks will focus on much more fundamental reasons that I understand as a fundamental investor, things like earnings growth, shareholders' returns. You see improvements in your financial metrics. And I actually found research data which showed that Japan's corporate return on capital used to be half that of other developed market, only about 2+%. And now, since around the late 2010s, 2016, 17 onwards, they observed that the Japan ROC, or return on capital, started moving much closer to and occasionally even exceeding the developed market average, which is 4.5% for a developed market corporate. So in essence, our model, our research all show us that there are lots of structural catalysts that's positioning Japan for much stronger growth. I would believe that this is just the beginning of the turnaround for Japan Inc. We noticed recently that the current Prime Minister Kishida, he announced in September 2023 that he wants to turn Japan into an asset management nation. And one of his key initiatives is to revise their NISA program. This is kind of the equivalent of our CPF or MPF in Hong Kong, CPF in Singapore, right? So it's actually very similar to what happened in the US in the 1970s when they passed the ERISA program there and they introduced the concept of 401ks. They allow you to basically get a tax shelter when you're using your CPF money to buy into equities. So various estimates suggest that that's going to unlock some $14 trillion of household financial assets, which are currently just parked in cash. So the Japanese, who are more son included, are actually very rich people, but they're all parking it in cash. So if all of them start buying into the Japanese equity market, JP Morgan estimates that this NISA program, which just launched in January 2024 this year, so very fresh off the out of the oven, it could lead to individual investors buying up to 9 trillion yen in Japanese stocks over the next few years. And just to share another anecdote, so I mentioned earlier my experience with the conglomerate who refused to sell their department stores. So I thought that back then, if you're an activist, corporate governance investor and you go speak to management nicely, they'll listen to you. But actually, I was wrong. You got to do it the Japanese way. So in April 2022, the Tokyo Stock Exchange restructured its market segments to prime, standard, and growth. I think we move to the slide 11, please. Sorry. So at that point, you had the Tokyo Stock Exchange basically said they wanted to focus on ROE and they wanted to get the Japanese market above one-time price to book. In 2023, they required the listed companies to do what they call a comply or explain. So if you're trading below one-time book, you have to explain why you're trading below book. I thought that wouldn't be such a big deal, and I was a bit skeptical. But when I spoke to some Japanese corporates and Nomura, I was quite surprised to learn that the CEOs in Japan were taking it very seriously. So in Singapore, we like to call it face, 面子. So why is it so important? Because turns out if you drop from the prime segment to the standard segment, I thought standard's good enough, but no one wants to be standard. Everyone wants to be prime. No one wants to be growth. So they don't want to drop from prime to growth to standard, to standard to growth, right? So as a result of that, we actually saw some JP Morgan research again, which showed that between January 2023 to November 2023, there were over half of these companies on the prime segment. They were trading at that time, at the start of January, they were trading below one-time price to book. By November 2023, 65% of these companies had announced buybacks, dividend increase, or even unwinding of cross-shareholdings. And this was all in an effort to improve their ROE and redeploy capital. So that's on the corporate governance side of things. On slide 12, we can talk a little bit about inflation. My chicken rice price has been going up every single time. Lunch these days is costing $15, $20. Everywhere in Singapore, we are very unhappy about the inflation concept. In fact, throughout the whole of developed markets, we don't like it. But if you know Japan well, you know that Japan has been fighting not inflation, but deflation for decades, ever since the 1990s economic bubble burst. This was one of the big issues that has stopped Japan from being able to also have a more healthy labor market. So what has been bad for the rest of the world with the Ukraine conflict, energy prices, supply chain prices, spiking, causing inflation is actually a good thing for Japan. Right. So with the imported inflation, especially with years of low interest rate causing the Japanese yen having the carry trade, so the Japanese yen has been weakening in 2022 and 23 versus higher interest rates in other developed markets. That has also led to imported inflation. And for the first time in 2023, the Shunto wage increase actually was up 3.6%, which is a big spike compared to the last 3 decades. And why is inflation important? If you remember Economics 101, I mean, I remember doing economics at A-levels. Runaway inflation, more than 10%, is bad, right? You hear about the runaway inflation in Germany after World War I. But actually, what we do need, a healthy economy does need a little bit of inflation to lubricate it. And that is exactly the kind of stimulus that Japan needs. So this helps with their rigid labor market. It improves the productivity. It allows people to move across companies and therefore improve productivity. And Kishida is also tackling this, labor market issue. He's trying to tackle it. He's introducing market reforms such as moving from seniority-based pay to merit-based pay, and also the NISA reforms, allowing them to be able to port their pension plans from one company to another is also very important, because that worked for the US in the 1970s with the introduction of 401ks. If I cannot port my pension plan after working for a company for 20 years, I might not want to move to a different company, even if they offer me 5-10% more, because I lose all my pension benefits. But now I can port it. That becomes a very important factor in my mind. So that has led to actually the third catalyst that we've observed. Slide 13, please. We've noticed that because of all these structural reforms and the inflation, that foreign investors are, for the first time in 3 decades, starting to reallocate back to Japan. Japan is popping up on everyone's radar. Q4 last year, it was the #1 question that was being asked by all the institutional investors. So based on Japan Exchange data, foreign investors have bought 3.6 trillion yen of Japanese equities, or roughly about 33 billion Sing dollars. And if you don't listen to me, listen to Warren Buffett. He's one of the most famous investor we know of. He's quintessentially American kind of investor, but he actually which is quite rare for Warren Buffett, invested in Japan in 2020 and increased his positions in 2023. He's a very smart guy, so his decision to invest in Japan definitely got everyone's attention. With that, of course, you might ask a very obvious question. Oh, okay, Japan's been making a lot of changes. Am I too late to the game? Is this, 2023 being a great year for Japan? I mean, I wish I could have bought it in 2022. Am I too late? Slide 14, please. We actually think that these reforms are structural. It's not going to get played out all in 12 months, and you're not too late to the game. It's just in the first innings, and it's starting to be priced in. Japan is still very attractive compared to a lot of other markets. As you can see, compared to US, compared to India, two of the markets that I talked about earlier, which people are very interested in allocating to, it's still cheap on a price to earnings basis, a price to books basis, or a PEG, which is price to earnings growth basis, right? And I mean, maybe compared to China, it's only that little bit more expensive. But China, as we mentioned earlier, comes with it a lot of attendant geopolitical, chips ban, all these kind of issues. So for us, that's a very convincing story about why Japan, and the reason why we approached Nomura, we worked with them, and we are really excited about this new launch that we've got.
Great. Thank you so much for that comprehensive start to why Japan and also the catalyst involved. Now, for those of you who just joined us, you're here with us on discovering the smarter way to invest in Japan. And if you like content like this, remember, if you want to watch a replay of this, definitely give a like, subscribe, and follow wherever you are, and keep those questions coming for our guests so that we can ask those questions for the second half of the show. Now, the next question. So, Eiling, as an investor looking at implementing Japan into one's current portfolio, what is an active ETF, and why could this be possibly a good option to the current complementary strategy?
So that's the crux of it. This is something really exciting for Singapore. For the first time this year, the regulations have changed to allow active ETFs. So to most Singaporean investors, when we think about ETFs, we're thinking of the traditional passive index tracking ETFs. But this Lion Nomura Japan Active ETF is the first, and we are really we worked very hard to make sure we are the first active ETF in Singapore. Globally, the active ETF market is actually a very strong and growing trend. Slide 19, please. In the 5 years between 2017 to 2023 Q1, the global AUM of active ETFs grew 3 times to more than 400 billion USD. And between 2020 to 2023, we've seen increasing portfolio allocations, not just by individual investors, but also institutional investors towards active ETF. And if we look at the example of Australia, the active ETF scheme there was so successful that Australian Exchange actually phased out their managed fund settlement service in favor of active ETFs, because what they saw was a lot of mutual funds simply converted themselves into an active ETF, and a lot of their pension funds there actually chose to invest via active ETFs. So luckily for us here, our regulators, SGX and MAS, recognize this global trend, which led to new rules being introduced January this year to allow for active ETF listings. So essentially, active ETFs, we don't use benchmarks the same way as passive ETFs. We don't just track the benchmark and blindly follow whatever the benchmark buys. We use it just for performance comparison purposes, and we are less constrained. We can buy something because there isn't a benchmark, but then we also consider active ways of looking for outperformance. So that gives us more room to outperform the market. And we can talk a little bit more about how we specifically do that, which is using AI, right? But there's a reason why active ETFs are becoming so popular, not just in Asia Pac, but also globally, right? If you think about ETF, it stands for Exchange Traded Fund. So people talk about all the advantages of ETF investing, but you realize that the advantages are actually not specific to passive ETFs per se, but rather they're the advantages of investing through that kind of instrument, which is an exchange traded fund. The channel of distribution is via the exchange, right? So people talk about things like liquidity. Slide 20, please. People talk about things like having liquidity in the market, accessibility. I don't have to be like a mutual fund. I have to subscribe by 10 a.m. that day, otherwise I miss the subscription window, etc. It trades all day long on the exchange. So long as the SGX is open, you can buy and sell it, right? That is nothing to do with whether it's active or passive. That's actually a function of the fact that it's exchange traded, right? Cost efficiency. That is, again, another advantage of being an exchange traded fund, because you don't have trailer fees, you have lower distribution costs, you have lower management fees. An active ETF is generally much cheaper and lower cost than a managed mutual fund, right? And then people talk about, oh, it's very simple to invest in an ETF. I just need a brokerage account, and it's very transparent when I'm investing in an ETF. Well, same with our active ETF. It's very simple to subscribe to it. You just need a brokerage account. You can even use online banking to subscribe, right? We can talk about how exactly to subscribe via moomoo later. And it's very transparent because we list the indicative NAV, which is the indicative net asset value, every day. And there is real-time pricing for the ETF by the dealers. And finally, because an active investment approach aims to outperform the benchmark, we do so by identifying the best stocks using AI, and we combine it with robust risk management, which gives us room to outperform the broader market. So you're not just buying into the Nikkei 225 or buying into topics, you're actually trying to outperform them. And if you think about what makes a passive index like the Nikkei 225, Nikkei 225 is a very, very popular instrument in Singapore. I think at one point SGX was one of the top futures exchange for Nikkei 225. But did you know that it's a price-weighted index? So what it means by a price-weighted index means that a portfolio will buy the same number of shares in each of the index constituents without regard for whether it's a large company, a small company, the economic influence of the company, or whether it's a good company or a bad company, right? So the idea about it means that if I have a stock that is priced at $10, that is weighted 10x that of a stock that's priced at $1. If you think about it logically, why should a stock that's $1 be be much less important than one that's $10 if actually the $10 stock is a less important or smaller company? So we think that active ETF, it overcomes these disadvantages with old school index investing, and it actually offers you the best of both worlds, because with the mutual funds we talked about the cost of investing, the inconveniences, but with the passive ETF you have a lot of illogicality in why and how you should track a particular stock. So we think that the Lion Nomura Japan Active ETF offers you the best of both worlds, the advantages of the ETF channel, whilst also offering the dynamism of an active investment approach. So a bit of a plug, this is Singapore's first AI-powered ETF, and the AI aspect actually counteracts one of the most common concerns that people tend to have on active investing, which is having the human bias and human emotions involved in the decision-making process. So the AI aspect allows us and ensures that we have a very disciplined approach towards investing.
Mm-hmm. Absolutely. Now, the next question is about, technology being so hot right now. I mean, it always has been, but really for this year, if we're talking about different trends, technology, AI, particularly for the Japanese market. But the question I have for you is, why AI powered, Nomura?
Yes, so I'll take over. So moving on to the slide 22. As you know, nowadays, the AI technology is utilized in many various fields. So as shown in the slide 22, there's examples of automobiles, cell phones, and smart home and surgery business, and so on. And meanwhile, our approach is to apply this AI technology to the wealth management business. So moving on to the next slide, page 23. So in terms of why AI powered, there are, I think, 4 key points. And the first one is capacity. An AI model works faster than humans and evaluate more than 100 factors. So work effectively. And in terms of the second point, dynamic, the AI model updates the model periodically. So this means the model responds to the market trend and adopts to the market market changes. And thirdly, the name discipline, the AI model avoids the bias, something like the cognitive bias and emotional bias that would, human beings will tend to have. Meanwhile, the AI model makes decision without such kind of issues and make reasonable decisions. And lastly, the model itself is developed by experienced investment professionals from both of Lion Global Investors and Nomura Asset Management. So those 4 key points enable the model to work efficiently and effectively and enables the outperformance to the Japanese market. And also, I'd like to touch, yeah, I'd like to touch
So, I
on.
mean, just how do these
Okay.
tools
Sorry.
work then, Nomura? Like these AI tools, and what are its components? Maybe you could just give us a little more detail for that.
I see. So basically, the factors used in the model are relatively traditional. Probably some of the attendees know such kind of value factors, growth factors based on the financial information. But the different point is our strategy uses advanced technology to combine those factors and also to utilize more than 100 factors, which cannot be basically handled by human portfolio managers. So I think that's a key point.
Thank you for that. Now, do you have any extended points, related to the ETF that we're talking about, especially based on what Eileen shared before for these AI tools?
Okay, so moving on to the slide 25, I'd like to mention about the key features of the active ETF. So I think basically there are 3 key points. And first one is, this one is actively managed, as Eileen said, not passive one. This portfolio is managed, and the portfolio consists of 50 to 100 stocks, and stocks are selected by the AI model actively, as I mentioned. And secondly, it is called intelligent. So as I mentioned, AI model works effectively and efficiently, works faster than humans. Also, lastly, the AI model adopts to the market, and this is a dynamic one. So basically, this model will change the portfolio on a monthly basis and try to capture the market trend. And also, moving on to slide 26, I overview the investment process of the active ETF. And in the left box, in the colored yellow, the investment universe of the active ETF is around 1,000 stocks in Japanese stock exchange, and which have high liquidity. And also, going to the middle green colored box, and AI model evaluates stocks with more than hundreds of factors and assigns scores to each 1,000 names. And lastly, so based on that, the model constructs the actual portfolio. And so, but considering various points, such kind of the number of stocks and also the turnover ratio, and considering the trading costs, something like that. That's a brief overview of the strategy.
Thank you so much, Nomura. I mean, we'll take more questions, okay, later on, because we already got some audience members coming in hot with some questions. So we're still picking them out, so keep them coming, okay? Now, the next question going forth, particularly for the start of the year, how is the partnership working out so far? What can we look forward to, not just between Lion Global Investors and Nomura Asset Management, but also with moomoo Singapore? Eileen.
It's fantastic. I mean, it was between Nomura and Lion Global, it was a match made in heaven. With moomoo Singapore, we're very, very grateful for the supportive match that we have between yourselves and Lion Global. I understand, Olivia, that you've had maybe this may be my first time on the moomoo webinar, but it's definitely not Lion Global's first time. My colleague was just telling me, giving me tips earlier. She said, Olivia's a great host. She'll ask you fantastic questions. So I believe it's a match made in heaven between the two corporates.
Absolutely. You can watch the replay of all the Lion Global shows that we had on our YouTube channel and also in app on the live tab. But thank you for that. I mean, are there any extended points? I mean, just going forward, I mean, if you could give us just maybe one key thing we can look forward to for this ETF, but also, other plans potentially.
So I mean, we can't talk about new products plans per se, but I'd say, this is, as we mentioned earlier, this is a culmination of many firsts. It's going to be the first active ETF. It's going to first artificially intelligent driven and powered ETF. And it's actually Lion Global Investors and Nomura Asset Management's first project globally together. But I am hopeful, and Nomura-san, trust me, I hope so, that this won't be our only. In fact, we signed an MOU just at the end of last year to talk about partnerships and development and doing much more going forward. If I could maybe touch a little bit on why Lion Global has decided to, partner with Nomura Asset Management. This has actually been a partnership that's been more than a year in the making. We first started speaking to Nomura's team a year ago, more than a year ago. When I think about Japanese financial institutions, and we wanted to do something in Japan about Japan, and when we thought about Japanese financial institutions, my first thought was actually about Nomura. My husband used to work at Nomura, so it's quite natural. Nomura is one of Japan's oldest and best asset managers, and they have a very deep Japan expertise. So when we looked at who we should partner with, we thought Nomura, that's a natural fit. So we courted them, and they responded well. As we mentioned earlier, as I think Shun Xiang may have mentioned in the past, Lion Global, on our side, we're one of Singapore's top ETF issuers. I think we've worked with moomoo on many of these ETF issuances in the past. Nomura, on their side, is also Japan's top ETF issuer, and also they have a 43% market share. So when our AI, as I mentioned earlier, my team, the Artificial Intelligence of Investment team, AIOI team, we're one of the pioneers in Singapore bringing bringing AI technology to use for investment decisions. So when our team met Nomura's team, we felt that it was just a match made in heaven. We are one of Singapore's pioneers. We received our IDA grant from MAS in 2022, and we already were managing a number of AI-powered funds. On Nomura's side, they established their innovation lab to start looking into AI in 2017, and they have launched lots of AI-powered funds in Japan to make investments using AI as well. So we realized that actually the two teams have very complementary philosophies and capabilities. Sometimes you say, oh, you have too many chefs, but in this case, the two chefs had very complementary skill sets. So that's why we collaborated to bring you this ETF, an ETF of lots of firsts. First active, first AI, and actually I might say not first, but the only Japan-focused ETF in Singapore at the moment.
Mm-hmm. Thanks for that. And before we take any questions and also go through a really quick demo for all of you, I have this question about, an investor looking on what are the reasons why they may want to look into an active ETF versus a passive ETF? Like, what could be those reasons, and how could that be a compelling reason to complement their current strategy?
Yeah. So as I mentioned, the active ETF makes investment decisions on, I would argue, far more logical basis, right? If you do a passive ETF, if you are tracking the Nikkei, you have a stock that's $8, you buy 8 shares of that. If you have a stock that's $1, you buy 1 share and it's a price-weighted index. To me, it's illogical. Even if you look at, say, topics and it's market cap weighted, but that just means that the larger the company, you'll keep buying into it. The more people buy into these kind of ETFs, the more the large names keep growing until one day there's a bubble that's too big and it's not sustainable. We use AI to do it. Nomura-san introduced our AI techniques and technology earlier. I mean, I'd give one analogy, perhaps, that people will hopefully understand understand quite well. It's a little bit like this. When I was a senior fund manager in a hedge fund, I used to train junior analysts to help me analyze stocks. So with AI, it's very, very scalable. I can get the AI to analyze 1,000 stocks. Right, with humans, you can't really get them to look at 1,000 stocks. Their brains will burn out. So I would have to train maybe about 10 or 20 analysts to look at, between 50 to 100 stocks. Or let's say you'd actually have to train 100 analysts, each of them looking at 10 stocks specifically, right? Our models take into account over 200 factors or features about each stock at any one point in time. You then have to train 100 different analysts to do that, right? So if you could have consistently ensured that each of these 100 analysts come in and do exactly what I taught them yesterday, that'd be great. But the reality of the matter is, when I was managing a larger team of analysts, they bring with them their human emotions. One of them will be, oh, I'm late because I broke up with my girlfriend yesterday. Oh, I'm upset because my son's studying for his PSLE. Oh, can I take 2 weeks off in the middle of a reporting season because my son's studying for his PSLE? I can't deal with all these stocks. Then you can't ensure that consistency. And when they had an argument with their wife, they'll bring a bad day into work. So your analyst comes in and you can't ensure that they're always going to be consistent. Whereas with AI, it's very disciplined, it's very consistent, and they can analyze millions of data points constantly round the clock. It doesn't have to sleep. And why do I say millions of data points? Because don't forget, our universe, as Uemura-san introduced earlier, is over the most liquid 1,000 stocks in Japan, right? So that's 1,000 stocks. Each one of these stocks, we look at over 200 features, right, to do with that stock. That's 200,000 data points. And then we don't just look at 1 day's worth of data. We go back, some of our models go back as far as 10 years. So 10 years, 1 year alone, that's already what? 1.2 million data points. 10 years, that's another 120 million data points. And that's just one model. And we combine many different models between Nomura and Lion Global. So that's millions and millions of data points, which a human simply cannot cope with. And when you think about it, humans, what do we do when we have too many data points? Oh, we will simplify, we will generalize, we'll make generalizations, which, currently it looks like small caps are doing well. Oh, currently it looks like large caps are doing well. But maybe it's not large caps, maybe it's not small caps, maybe it's mid caps, maybe it's small caps that have a certain attribute, maybe it's large caps that have a certain minimum growth level. So these are all the kind of patterns and things that humans may not be able to detect, or even if they can detect, they have a limited amount of bandwidth. One of the reasons why I really why I built my team at at Lion Global was because I was doing so much analysis using my miserable little human brains, and I couldn't replicate it fast enough or consistently enough that I was like, hang on, why don't I just write a set of computer code that will replicate what my brain does and does it 24 hours a day without, worrying about whether their girlfriend called them today or not, and give me the scores that I want about the stock. Is it a buy, a hold, a sell? Is it on 1 to 10? Is it going to be a number 1 or a number 1 or number 10? Right? And then I realized that can work and we can scale it up so much better and it's so much more consistent. So, Uemura-san mentioned earlier, AID, the acronym, active, intelligent, more intelligent than my human brain, and dynamic, because we rebalance every month. So we incorporate the latest data to do with the stock and the market.
Absolutely. Thank you so much for that. And also a fireside chat. Now, I do want to take some questions from the audience, but before that, we'll be back with you both very shortly because I do want to show everyone how you can access very quickly on your app for this ETF, and also how you can keep track of this particular one on your tabs on the phone, and also how you can watch the replay of this. Okay, so if you have your phones with you, definitely follow through with me. Okay, I've got mine right here. Now you can see my screen. Let's have the screen up. And if you open your app, of course, you can just go straight forward here. Under this tab, you can click on Singapore and you can see the available ones are right here. As we mentioned for the first half of this live, we're talking about the Lion Nomura Japan Active ETF powered by AI, okay? So the AI tools are a key component of this. And if you do want to subscribe to it, of course, there is that timeline that you can also keep track of. You've got the details right here, and it's updated constantly with the latest news from Lion Global Investors on their page. Okay, so under this, you can keep track of the performance and the quotes and the news fund whenever it gets updated. But under comments, if you go into the Lion Global page, you should definitely give them a follow. And you just have to click on the button right here and you can see all the other available funds here. But of course, for today's topic, we're talking about the one powered by AI. So if you do want to find out more about this particular ETF, you can find out here under this post. Okay, you've got the key fund information. We also shared that during the live, and we've also got the reasons why you should invest. So basically the summary of what we covered today, and also the reward points for any subscription if you subscribe within this frame. So I think it's a good idea to really get on the app right now. You know, if you want to really apply what you learned from Eiling and Umura today, I think it's important that you head onto your app, get onto this page, and definitely click here to subscribe when you're ready to see full details. Okay, you've got the deadline announcement and listings listed all here, so definitely check it out. And as promised, if you want to watch the replay of this show, it's very straightforward. All you have to do is go to your Discover page, Moo tab, and as always, we're under the live tab under our own live sections, TV sections for moomoo. Okay, so over here we've got all, of course, the earnings, and we've got the webinars, we've got the events, the seminars, and all the announcements as well from the Fed upcoming for the year. Everything is here for you, but definitely check the replay of this if you missed out any points or came in late to the live webinar. Thank you so much, everyone, for following us through with this short demo. Let's have our guests back on the floor for the first question. Now, I'm just going to throw it onto the floor for anyone to take. Our first question would be from an audience member wants to know, are you able to share some of the potential top holdings in the ETF if available?
Yes, we do have a bit of a pro forma slide. I can't remember what slide number is it. Is it slide number? I think it should be slide number 27 or
Should be 28.
28. Oh, thank you. Thanks, Roberta. Yeah, so that would be, I think, our pro forma portfolio at the moment. As you can see, it's we're overweight financials, home builders, and energy. And if you look at the largest holdings, we are not trying to just mimic the topics or the Nikkei. We are trying to find stocks that really will outperform based on our AI model score.
Thank you for that. Now, the next question is on currencies. So for Umura, you know, with a weak Japanese currency, will it help with the Japanese share price? Can you perhaps detail the relationship with this and also the ETF's performance?
I see. So looking into this year, so I think there is a difference between the interest rate policy between Japan and overseas, like US and Europe. And I think the Japanese interest rate will perhaps likely increase somewhat, but the more important thing is the other countries' interest rate will decrease, considering the decreasing inflation rate and decreasing demand. So this is not an AI opinion, but my personal opinion. But so basically, in last year and also 2022, what happened in those years? So Japanese interest rate was stable in negative level. Compared to that, US interest rate increased higher and higher to the 5% in the US. I think the reverse movement will happen going forward, including this year. So basically, in terms of the currency rate, it is likely the Japanese yen would appreciate compared to other countries. So, so for me, for Japanese investors, it will be not a good thing. So Japanese yen will depreciate if I invest in overseas. But for Singaporean investors, the price, considering the currency, it will be increased. So I think this will be the good opportunity considering that.
Thank you for that. Now, Eileen, do you have any extended thoughts on, your views of the Japanese yen and what impact it might have on the ETF this year?
Yeah, sure. So I'd agree with Umuro-san. I think the moves that we've seen over the last 2-3 years, where we've seen the Fed and therefore most of developed markets hiking rates, and therefore that carry spread between the US and Japanese yen widening, is most likely going to reverse at some point this year. We already started seeing the move at the end of around November, December last year, where the yen started appreciating. But in the last week or so, we've seen a slight reversal or a pause of that Japanese yen appreciation. We do think that the yen appreciating actually would be good for this ETF, because we deliberately have not made this a hedged ETF. In other words, we don't hedge against the Japanese yen. So as a Singaporean investor sitting here, it's a reverse of what Umura-san's position is. Because we don't hedge out the yen appreciation, we will benefit from yen appreciation in Singapore dollar terms. And at the same time, I looked at some economists, again, not AI related, but most economists do expect the Bank of Japan to start ditching its negative interest rate at some point this year. We do think that Ueda is he's a very experienced central banker. Likewise, so is Powell, right? Both will give indications. So we will probably start seeing the Fed cut, whether or not it's 3 cuts or more or less, and when it starts, whether it starts in March or June. I don't want to start speculating, but we probably will start seeing cuts by the end of this year, and we will start seeing that reversal in the Japanese yen. Yeah. So it'll be good for the ETF to do for when that happens.
Thanks for that. Next question, we're talking about, someone here has highlighted all the uncertain issues that have popped up, right? So for example, like COVID-19, things that just forces the world to react. So I suppose the question here that they're asking is how can we navigate the uncertain times with this AI-powered ETF?
So I'd like to maybe take this one. It is very uncertain times, but you know what? In my almost 2 decades of investing, there's never been certainty anytime. Anything that is too certain is already priced in. That's why if I look at the Japanese yen over the last week, it was way too certain that it was going to appreciate. That's why it started depreciating a little bit. So that's one thing to note. The other thing why we use AI is because in some ways, AI is able to recognize the patterns, not just in the past week, the past month, the past year, even the last 10 years. So it's always, as an investor, as a human investor, right? I've always felt that if there's one thing you need to know about investing, it's that it's always that fight between greed and fear. Anytime things appear too certain, you are getting too greedy. Anytime you're too scared to act, it's because you're fearful. So when we're trying to balance that in the AI model, we look at things like trend following, which is representing greed, versus things like mean reversion, which represents fear. So when things move too far one way, the pattern starts to revert. When things move too much, reverting, it starts moving again. So it recognizes big patterns and small patterns. And that's why we try to use AI to basically help us do that pattern recognition. Having said that, I do want to qualify that AI is not prescient. AI is not like, Minority Report, where they expect something to happen which hasn't happened yet. Because I've been asked before, oh, why didn't your AI recognize when she made that announcement that shocked the entire market? And I said, well, if the AI could recognize it, then the market wouldn't have been shocked, would it? Right? If humans couldn't even have expected C to make a sudden reversal in policy announcements, or Ueda for that matter, right? Then inherently it means that they haven't started signaling to the market. There's been no signals that we can pick up to. So it's not even AI. Humans wouldn't have reacted to it as well. And that's why there are sudden shocks in the markets. So we can only do the best. And like I said, it's a very consistent model that is supposed to replicate how a good human investors would weigh risk reward, greed and fear, trend following versus mean reversion. Yeah.
Thank you for that. Now, Umura, for your side, you talked a lot about the AI tools, right? So, could you perhaps expand a little more on what goes into that? Like how have you made that decision? I mean, between both partnerships, to really trust that system. Of course, we talked about the strengths of AI, but just for the investors themselves to find reasons to trust that maybe programming that you've chosen.
Okay. So basically, this product is the collaborative one for the LGI and Nomura. And actually, the two models from LGI and Nomura are very different. This is a good thing for the investment strategy because if the one model is too biased to some market trend, so if the opposite trend happens, the performance will worsen significantly. But on the other side, our strategy combines the two types of different models. So it is called so-called ensemble one. So try to balance, not to bias to significantly to some market risks. So I think this collaborative strategy will be successful compared to only sticking to one investment strategy.
Yeah, I'd just like to add, Uemura-san is right. This is getting a little bit on the technical side of machine learning and artificial intelligence. But one thing that is widely accepted by artificial intelligence specialists is that, or artificial intelligence finance specialists, quant specialists, perhaps I'd say, is that ensembling models can often give you a better synergistic result. So our own experience combining the outputs from various models have shown that it compensates for each other's, should we say, shortcomings and enhances each other's pros. So when you put two models together with slightly different ways of working, the end result is actually more robust and tends to have better performance.
Thanks for that. I mean, you mentioned quant. Of course, for those users, I know you're tuning in right now. We have a lot of you who are also learning on moomoo Algo and also quant trading on our Windows. So definitely check that out if you want to find out the tutorial on the live tab, but also on the YouTube channel. Okay, I've got a final question here, and let's split it up to two parts, and I'm just gonna put it out to the floor. So, thank you for showing your top holdings. Now, may you just share the rationale and the reasoning for focusing on financials, consumer, and healthcare sectors?
Yeah, sure. I think this is down a little bit to the specific factors that the that the AI model picks on a bottom-up basis. But in the case of maybe financials, we've seen that a lot of large Japanese financial institutions have been one of the more active having some of the more active players in promoting strong corporate governance and improving shareholder returns in Japan. So, for example, if you bring the slide up again, one of our largest holdings is Tokyo Marine, right? This company used to trade at 1x price to book back in 2020. It has actually gone up quite a bit in the last 3 years, such that at the end of 2023, it was trading at 1.6x price to book. So you might say, oh my gosh, there's a huge increase in its multiple. Why are you still buying it? But its multiple has gone up 60%. But in the meantime, it has actually taken Abe-san's corporate reforms very seriously. So its ROE, looking at Bloomberg consensus numbers, its ROE used to be about 7.5% in 2020, and it's almost doubled to 13, almost 14% as at end of 2023. So when you adjust the fact that it's very proactive in boosting shareholder returns, that it's got very active dividend and share buyback policy, and it tries to release excess capital by unwinding cross shareholdings, it actually looks very attractive. And we've noticed that amongst a lot of the larger corporates in Japan. And so you don't just look, I mean, think about it as value. I try to teach my kid this sometimes, because my kid will sometimes say to me, Mommy, the Hello Panda is $1. Is that expensive or cheap? I said, it's not about whether the Hello Panda is $1 or $2. The question is it value? if Hello Panda costs $1 at the supermarket and you buy it from the convenience store for $2, then it's expensive. But if you are getting, an ice cream which normally costs $3 at the supermarket for $2 at a convenience store, then that is cheap. So it's same thing with stocks. It's about value, not about whether its price to book is 1 times or 1.5 or 1.6 times. So when we look at it from that point of view, this company has really improved its corporate governance and improved its shareholder returns. It is good value. Same thing if we compare it to, we talked about asset allocation earlier, how we allocate to the US, to India, for example, or to Europe even, right? So Tokio Marine is a property and casualty insurer, P&C insurer, right? It's currently at 1.6 times, but your typical P&C insurer in the US actually trades at almost 2 times price to book, and your European P&C insurers tend to trade at more than 2.3 times price to book. So when you compare that versus like their ROE is very similar now that they've improved it, it actually appears quite attractive. So, and as a human, these are just 2 or 3 factors that I'm looking at. Our machines have gone through even more. It goes through like the filings, it goes through the news flows, it goes through a lot of other data points around each of these stocks. And that's what leads to it, being one of our top holdings and having one of the top AI scores from our model.
Definitely. I mean, you also touched on the second part of the question, with the external factors and all the other elements to consider that go into that decision-making process for the AI-powered tool. So thank you so much for that. And as to the audience as well, I mean, you still have questions coming in, but that's all the time we have for today. Thank you once again. Now, I want to go into the final takeaway for our audience members. This being the first show of 2024, what would you like to say to those listening? Umura.
Yes, so please see the slide 29. This is information for active ETF. I think this is very unique product, which is the first active ETF utilizing AI technique investing in Japan. And actually, my team member in Nomura Asset Management Tokyo is engaged in the first active ETF in Japan last year. Instead, I was involved in the first Singaporean active ETF. So I'm very excited to have this opportunity. So please consider to add, newly include this ETF to your investment portfolio. Thank you.
And Eileen, what about yourself?
Same slide. The key information is there. Remember these dates. 25th of January is the end of the IOP period. So if you want to subscribe before that, preferably before the 24th, because you don't want to be last minute. The listing takes place on the 31st. Starting on the 31st, you'll start seeing the ticker. And just so you remember the ticker, our marketing team chose this. The ticker is JJJ. So they said, remember, it's Japan, Japan, Japan. And I just want to again talk about our acronym on the reasons why you should be buying into this ETF. AID, it's actively managed, it's intelligent, it uses AI models, it's dynamic, and you remember it's a combination of it's the first active ETF, it's the first AI powered ETF, and very importantly, if you've been convinced by me for all the reasons that I've been talking about why Japan, this is Singapore's only ETF that's focused on Japan. In fact, when we first conceived this back in the end November 2022, I was very convinced. We knew we were definitely going to want to do Singapore's first AI ETF. We were hoping the SGX would release the rules to give us the first active ETF. And then my team was, we were brainstorming. We were like, well, what should the universe constituents be? And I said, Japan. And at that time, people were very skeptical. But if you think back, if you listened to us back in November 2022 and bought into Japan, how much money you would have made already, right? So hindsight's 2020. There's no point crying over spilled milk. Buy it today. Today's the time. Frankly speaking, I've been an investor for almost 2 decades. I've seen Japan come and go, but this is the one time where I see the whole of Japan Inc. take it quite seriously. And I noticed that it's actually in tune with Japanese culture, that this time they are taking what their leaders are saying very seriously. Yeah.
Absolutely. Gotta remember JJJ, everyone.
JJJ.
So definitely type that into the moomoo app and rewatch the live demo if you missed that part out. Now that was Eileen from Lion Global and Umura from Nomura. And we'll see you for our next show together, hopefully soon. But I wish you the best year ahead and thank you for coming onto the show.
Thank you, Olivia.
Thank
Very
you.
happy
Thank you,
to be
Olivia.
your first show for the year. Thank you. Take care.
Thank you.
And to the
Thank you very
audience,
much.
if you have any more questions, definitely leave it in the comments as always. Okay, we're always listening to you. And if you have any more questions as well, based on what the expert speakers shared today, definitely type it in because we're still monitoring it post live to see what else we can craft and create just for you. Okay, so we cannot wait to craft more upcoming shows for you. As usual, it's our chance to connect you with experts like Eileen and Umura today. So we hope you learned as much as we did. And as always, this is about giving you the right educational tools so that you can keep re-strategizing and looking for new tools to improve and complement your current strategy. So do follow our pages. Here's a QR code just for you. If you want to keep on top of everything on the latest news, the latest live shows and content that we already have in store, definitely give us a follow right here and scan the QR code to be linked to our social pages. And of course, here is the key visual for this particular ETF. You can find out more information in the description. And also there's a link down below. So wherever you're tuning in from, you can click on the link and that will take you to the page for this ETF. But it's definitely something you want to check for today. Okay, so definitely do it right now. And as always, a pleasure having everyone with us. We'll see you for the next show very soon. I hope you have a great week ahead. Once again, you're with me, Olivia Higgins, and happy investing, everyone.